Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So as we go into a new week here, major news items to have on the radar include the following. The biggest market moving event that traders will be watching will be the European Central Bank interest rate announcement and the speech afterwards with Christine Lagarde. That will be next Thursday. This will come just 1 week ahead of the Federal Reserve's final monetary policy meeting of the month. That will be on the April 27th to the 28th. The FOMC statement will be delivered on Wednesday, the 28th of April. Again, that's a major market moving event, especially for commodities. Other macro events that traders will be watching closely, those include US jobless claims and US manufacturing PMI data. Now, last week was a huge week for commodities. We saw gold and silver prices break out to multi-week highs there. So gold prices, they broke out above 5-week highs. Silver prices broke out to 1-month highs. In fact, we were able to bank over 2,500 points profit on our commodity trades last week. So for every one lot that you would be trading, that's $25,000 of profit. For every 10 lots that you would be trading, that's $250,000 of profit that we benefited from at the Gold and Silver Club with all of our members. That's across positions with gold, with silver, with copper, and the energies as well. So that's been incredibly lucrative. Again, in the last week, many of these trade opportunities we've been discussing with you week to week, and also on gold and silver asset of the day, especially on the metals, talking you through the gift and opportunities with gold when it broke down sub $1,700 per ounce, and silver when it broke down to between 24 to 25 US dollars per ounce. A lot of the sentiment got extremely negative for the metals. Many traders out there were panic selling out of their positions at the worst time to do so, just at the lows, when we were looking at this as a gift to really build positions and stack further trades into our portfolio. So again, it's been a fantastic week. Now, as we head into the second quarter of 2021, infrastructure spending, stimulus, and inflation, they're beginning to emerge as the three major themes of the post-COVID-19 economic recovery. Now, last week, copper, palladium, silver, and industrial metals, they skyrocketed to multi-year highs, driven by the coming surge in green energy and infrastructure spending this year. All of these metals, they play a vital role in green infrastructure. Copper prices, they took the center stage, rallying to their highest level since 2011. Copper prices have now doubled from the lows seen a year ago, and copper's explosive rally also pulled up palladium, which is now up 73% in the past 12 months. Meanwhile, silver prices, they were once again trading back above $26 per ounce on Friday. There are plenty of fundamental factors why metals are on the move, but the key driver is a vaccine-led recovery, which is fueled by massive amounts of global stimulus in green energy and infrastructure projects. This is against a backdrop of tightening supply across many high-in-demand commodities, which indicate we're now at the beginning of a new commodity super cycle. The last super cycle, it occurred in the 2000s. That was when China began investing billions of dollars into mega infrastructure projects, which required an abundance of industrial metals. This sent commodity prices surging to record highs. And now in 2021, it's America's turn to step up with President Joe Biden's Build Back Better plan to transform the US landscape and economy. President Joe Biden's ambitious $2.3 trillion green energy and infrastructure spending plan will involve pumping hundreds of billions of dollars into improving the nation's aging roads, bridges, schools, railways, waterways, airports, cellular network, as well as building a national network of 500,000 electric vehicle charging stations by 2030. All of this ultimately points to one thing: the US is going to need more commodities and lots of them, specifically the industrial metals, which includes copper, palladium, platinum, silver, lithium, nickel, and rare earth metals for electrical vehicle batteries and 5G technology. Joe Biden's multi-trillion-dollar infrastructure bill is expected to spur the nation's biggest ever buying spree into commodities, which further suggests that we could be on the verge of a multi-year super cycle as demand outstrips supply over the next few years. In the other metals, gold has also made a very positive start to Q2 with a second consecutive week of gains. The move in gold has been predominantly driven by the US dollar, which is now broken down to 1-month lows, driven by a sharp rise in inflation, which has increased at the fastest pace since August of 2012. Also last week, Fed Chair Jerome Powell confirmed the central bank's commitment to keep its quantitative easing policy in place well into 2023, which is another supporting factor for precious metals. Whichever way you look at it, the case for commodities in a well-diversified portfolio has never been more obvious than it is right now. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. So firstly, if we have a look at gold, bring it out to the higher time frame. So we have a look at the weekly chart here. You can see where we've now taken out the neckline. This was after we came in for 3 taps into liquidity here, found support again going back to those levels that were tested before we had the rally over last summer, where gold went up 9 consecutive weeks in a row, hit an area of key liquidity. 3 times we tested that level over the first quarter. That found support on 3 occasions, really giving some fantastic opportunities to get in sub 1700, as we discussed previously with you on Gold Asset of the Day, that would be a gift if we drop below those levels, and really a great opportunity to stack further trades. Obviously, since those lows, we've now rallied over 1,000 points to the upside for gold, breaking out now to 6-week highs. So we've closed at $1,776 per ounce. It's now the 2nd consecutive week of gains here. We look strong here as we head into a new week. I mentioned it before, but typically the month of April is very constructive for the precious metals, and look out for fresh capital to come in at the beginning of a new quarter, at the beginning of the month of April. That's exactly what we saw right at the beginning of the month with the push higher and the support that came in at $1,676 per ounce, which is interesting because we're exactly up $100 now from those lows that were formed at the beginning of the month. So what I'm looking at now as we go into a new week, we've finished with a fairly strong close here, and again, just going back to the higher time frames here on the weekly chart, I want to see if we can magnetize towards 1800 as we go into next week. So what we've done is we've taken some partial profits off the table, protected our trades here, but we're going to benefit if the metals continue to rally higher here. So ideally, I would like us to come back up to that magnetic level overhead around the 1800s. I wouldn't be surprised to see some sticky price action once we get up to those zones. That was a level that we broke down from the middle of February here as well. So I would expect once we get to those levels that we could start to pause and consolidate. But for now, certainly we'll keep our exposure as is. As I mentioned before, we always like to be early into our trades. We've been very early in our positioning with the metals across platinum, across copper, across gold, across silver. Then moving over to silver. Silver's been great here. As I mentioned before, we've been accumulating positions between 24 up to 26 now. That's worked out extremely well. We banked just under 400 points on this last week, and we've still got a number of positions running at the moment with silver too. So that was our accumulation zone. You can see now we broke out to $26 per ounce. We're traced back to 25.94 into the close. I want to see if silver going into next week can take out the neckline here and make a move up towards the highs from the middle of March here. Very similar to what gold has done. Again, if you look at this on the weekly time frame, price action is very constructive for a potential fill of that neckline overhead. So a push higher to fill that neckline and then take us back towards the 26.50 zone is what I'm really looking out for as we go into next week. Again, we bank partial profits, protected trades here. So copper, we banked 250 points last week. Copper had a really nice breakout here over Wednesday and Thursday. We pushed back up to resistance. You can see where it's been quite a sticky zone around the end of February highs here as well. It's a good level to take some profit off the table. Again, we protected positions here, but if you have a look at this on the higher time frames here, we've broken out of a continuation pattern. I'm looking at higher prices here for targets on copper, especially with all of the infrastructure spending which is to come as well. But again, our positions have been protected, and ultimately we'll keep the exposure as is and see if we can get a push all the way up towards the swing highs here. So we're keeping the trades as is right now for our copper positioning. And then moving over to platinum here, you can see where platinum, we've still got 2 positions on platinum. Very interesting to see if platinum is able to hold around the 1200 level as we go into next week. Hedge funds and money managers actually had a fairly sizable trimming of their net long positions in platinum in the last week. So I want to see what happens here, because you will note that this time of year, normally platinum is more vulnerable to corrections, and it's lagging actually now behind gold, which is broken out to 5-week highs here, and silver as well, which is broken out to 1-month highs, whereas platinum at the moment is lagging right now. You can see it's not had the same sort of follow through through over the last few days here. Nevertheless, if platinum does follow through, break out, I'll be looking at the 1250 level next. We've still got a couple of positions on this market, which again are protected, but I wouldn't be massively surprised if platinum was to pull back and roll over, in which case I would look for better entries back towards the swing lows that were tested in the middle of February here. Now, moving over to heating oil, this worked out great for us. We banked over 1,000 points in this market last week. I identified it with you as well on the weekend report. You've got this block to fill above here, neckline to break out from consolidation over the last 4 weeks, which has just been great to keep coming in and out of. And then last week we banked over 1,000 points on this trade. We protect the position and still have some exposure running there as well. And then finally, looking at the dollar here, you'll see whilst the dollar is continuing to break down, commodities are performing very well. So we just need to keep an eye on the dollar here, because if the dollar was to suddenly have a turnaround in price and start breaking back above last week's highs here and then have a continuation to the upside, that's where it would put pressure on a lot of commodities. But if it does continue to break down as it is at the moment, and we see a slow and steady move back down towards a 91 level as we go into next week, this is where it will likely propel other metals and also energies higher in the short term here. Remember, we have the European Central Bank announcement later on next week as well on Thursday. That can create a lot of volatility, and normally there's profit taking ahead of that event. So if you see a big rally in the lead up to the European Central Bank announcement on Thursday, it's normally a good time to take some profit off the table. So just be mindful of that. Right now we have 15 trades running across commodities. All of those trades with our members at the Gold and Silver Club are in profit, and they're all protected at the moment. So we're going to benefit if we do see this additional follow through into next week. But if we get pullbacks, the trades are protected. Then we'll wait for the dust to settle and look for fresh opportunities if we do see big volatility going into next week. But again, many technical traders out there will start getting their confirmations on their higher time frames now as we go into next week. They've been really late to these trades. They haven't been early. Most of them are panic sold, and now they're getting their confirmations. I would just say watch out. We saw this back in January as well. Many technical traders were getting their confirmations on gold in particular on the weekly charts on this breakout to the upside, where many were stating it had broken out of this weekly bull flag formation. It just ended up being a big trap, and since then we continue to see gold pull back and just offer great opportunities to trade it week to week, range bound price action. But again, be mindful that going into a new week here, especially with some of these major news items, European Central Bank, and the following week the FOMC statement, definitely when traders are panic selling, this is where you want to take the opportunity. When markets are fearful, to build your positions, because these pullbacks are often a really big gift, especially on commodities that we trade at the Gold and Silver Club. This is where you want to be utilizing more data and market intelligence, trading the same way that the professionals do, understanding what the hedge funds, money managers, banks and institutions are doing week to week. Alongside that, understanding the daily, the weekly, the monthly cycles in the market, capital flows over the quarter, over the year, and of course what major news items will be catalysts for big moves in commodity markets. It can be extremely powerful to plan your trades in the lead up, and then after those big news items as well, that can add as a catalyst for just massive volatility, which can give you some really great entries on a lot of markets. Also, you want to have access to real-time macroeconomics, geopolitical news, and marry that up to with the intermarket correlations, the ratios in the market, and knowing key areas of liquidity where you should be banking your profits, as it's just as important to know when to bank your profits as it is to enter into trades. Many traders really struggle with trade management. So of course, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You have access to real-time trade ideas, institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.